Hi to all of our attendees. Thank you for joining us. My name's Miranda Stewart. I'm Professor and Director of Tax Studies at the Melbourne Law School, and this is one of the a webinar in the series that we're running on law in the time of COVID-19. The series brings together Melbourne Law School scholars and experts with others who we work with elsewhere at the university and other institutions to look at the sort of law and policy dimensions of the health, economic and social crisis in which we find ourselves. So just to note, the event is live and is being recorded. Parts of it may be published later. Let me begin by acknowledging that I'm working today here at home, actually near the Yarra River, on the traditional lands of the Wurundjeri people of the Kulin Nations, and I pay my respects to Wurundjeri elders past and present and traditional custodians of lands from which you may join us today. I must say the Prime Minister's speech also made some acknowledgement of the heritage that we have, which was good to hear. Let me also acknowledge and welcome our academic community, alumni, students and friends of the school. It's wonderful to have people from the law school and broader community together at this time. I'm sure people are getting used to webinars, but we're still trying to sort of produce a really interesting and good discussion in this format. Let me introduce the topic and our panellists. As people will know, the Australian government responded to the health crisis, the COVID health crisis, with a massive fiscal injection. That included various cash payments to businesses delivered through the tax system as a cash flow subsidy. It included very substantial changes to the welfare system, what we used to call New Start and then Job Seeker, but with a very large supplement that substantially increased that payment, relaxation of income and asset tests, and also relaxation of conditions attached to those social security payments. And of course, the enormous JobKeeper wage subsidy, $1,500 a fortnight for millions of workers delivered to their employers through the tax system. In addition, a range of other payments and subsidies. One that I particularly noted was the rather sudden payment made to support the childcare sector and to stop that sector from collapsing. So I think we've succeeded so far in the health battle against COVID-19, and the question now for the Prime Minister and our politicians, but also for us as academics and policy thinkers, is how can we pay for that, and how can we rebuild and recover the economy and well-being for the country going forward. So the government postponed, of course, the usual budget, which would have been a couple of weeks ago, until October, but is making a series of announcements, and the Prime Minister just is giving his National Press Club speech now and did make reference to issues of tax reform in that speech. So what comes next? So to help us analyse some of these issues, I'm calling on the expertise of a wonderful panel. I'll just introduce them briefly. First, we have Mr. Paul Tilley, who is a Senior Fellow at the Melbourne Law School and teaching tax policy with us in the Masters program. Recently retired, fairly recently retired from a senior tax position inside the Treasury, and author published last year, the book Changing Fortunes, which is a history of the Australian Treasury, including how it has responded to crisis over various periods of time. So welcome, Paul. I also have Danielle Wood, delighted to welcome Danielle, who is currently Director of the Budget Policy and Institutional Reform Program at the Grattan Institute, and is a well-known commentator and expert on economic and fiscal policy in Australia. I know Danielle has been participating in many media comments and events as the COVID-19 crisis unfolds. And Grattan has been doing significant work on the fiscal costs and expenditures of the different levels of government so far. Our third expert, we have Professor Guuyonne Kalb, who's a colleague of mine at the University of Melbourne. Guuyonne is a leader in research and labour markets and employment at the Melbourne Institute of Applied Economic and Social Research. She is also recently and widely published on issues of gender and labour supply. I note the Prime Minister did actually raise the issue of women's workforce participation in his press club speech, saying how much that participation had gone up actually in recent years. Professor Kalb is also a program leader in the Centre of Excellence on families and children over the life course, or sort of life course wellbeing, a matter which I think is quite relevant to the COVID crisis. So it's wonderful to have that panel. We also have some assistance behind the scenes. Thank you very much, Dr. Emily Mullane, for helping us in managing the panel. I will be moderating a discussion between the panellists on these sort of general themes of tax and welfare reform and response to crisis for about 30 minutes or so. We do have a reasonable amount of time for questions. Participants can submit a question in the Q&A at any time, and we will collate those, pull together the interesting questions and where we see in particular people asking common questions and try to make sure we can address those during the time. And we will wrap up just before 2 p.m. So let me go right ahead. I wanted to start the panel discussion thinking about this issue of the size and sort of fiscal and economic effects of the policy response. Of course, not all governments around the world have done this really formal lockdown to various stages, and we know that Australia, through the National Cabinet, has done that. People, I think, would have stopped consuming, businesses would have had to stop operating anyway, and we formalised that in the lockdown. So I'm quite interested in then thinking about what has been the economic effect of this policy lockdown, and then what is the size of the fiscal response so far. And that also raises issues of how do we estimate and forecast these kinds of things. And perhaps what is the most important element of that fiscal policy response so far. So actually thinking about the size of response, I wanted to just quickly go to Danielle first. To ask you, Danielle, given that you've been tracking the size of expenditures and response, what do you see as having been the most important element of that fiscal response? And do you have some initial comments about the size of the response so far?
Yeah, sure. Well, I did have a very nice chart which showed that Australia's fiscal response as a share of our GDP was sitting just under 10%, which was the second largest in the developed world after the United States. Unfortunately, that chart is no longer valid after Friday's announcement that the JobKeeper program was going to cost $60 billion less than we expected. But it is fair to say that the response is large, larger than anything we've ever seen from governments before in response to a crisis. It's still going to be very significant as a share of the economy. And I think, you know, what I like about the response is I think most of the components of it really go to the key objective here, which is because of the nature of this economic shock, it has been shut down of large swathes of the economy in response to a health crisis, as you said, Miranda. It was really about trying to keep households and businesses afloat during that lockdown period. So what we didn't want to happen was large swathes of businesses just simply having to close their doors, otherwise viable businesses shutting up shop. And we come out on the other side of what should be a temporary shock, and that becomes a permanent one because we lose that productive capacity. On the household side, obviously, we are trying to support household incomes. We want households to continue to pay their bills. And we also want to make it as easy as possible for them to get back to work as things start to reopen, because we know from past shocks that the worst possible outcome is if people stay out of the labour force for an extended period, you start to see some scarring effects from that unemployment experience. And if you follow those people, even 10 years later, you see impacts in terms of their labour market outcomes and household incomes. So it's hard to choose a favourite component of the package, but I mean, really the JobKeeper package was quite cleverly designed. It is not perfect, and government clearly prioritised speed over design perfection, and that was the right answer given how quickly this shock was unfolding. But what I like about it is it does maintain that attachment between workers and their employers going to this point, that as things reopen, that means that those workers can get straight back to work and we don't have to go through people trying to find new jobs as things reopen. The other thing I like, and what sets it apart from some of the international wage subsidy schemes, is that it is paid to people who are working as well as people that have been stood down and are sitting at home. And I think that what that's meant for Australia is that businesses that have been able to find ways to stay open and keep some revenue going despite the shutdown. So, you know, the gyms offering online classes, or the local cafes offering takeaway or cooking classes online, all sorts of things. They've been supported in doing that by the JobKeeper program, whereas in places like the UK, the workers only get paid if they stay at home. So I think it's actually encouraged a bit more economic activity than what we would have seen, a little bit of innovation and creativity, and will help us ease out on the other side. As I said, it's not perfect. We can point to issues. I think overall it's really nicely designed.
That's right. And it's certainly the largest component of that payment, and we might come back to that aspect as well. I might just jump to Guuyonne to sort of follow up there, thinking about the different elements of the package, the fiscal package so far. Is there an aspect that you would identify as being the most important, perhaps thinking about that emphasis on families and children and well-being through the crisis?
I think one of the really good things about the package is the complementarity of the policies that were introduced. So it's not just one policy that sort of is sort of the key element. It's the combination of policies, I think, that has really worked well. And so I agree with Danielle that it's sort of, you can really not pick one. I think they work so well because they all three, like the several different packages that were introduced at the same time that complemented each other. So I think that important component of JobKeeper is to keep people in employment, connected to employers, and potentially keeping businesses afloat that otherwise might not have been able to continue. Through this subsidy, they have been able to sort of find different ways of providing services that might not be as profitable as what they had before the crisis, but through the subsidy, they can actually manage to keep going. And then the job seeker payment is incredibly important for people who have lost their jobs. As we all know, the usual unemployment payments are very low. So for people to lose a job and then having to move to the New Start allowance in most cases would have been a really big shock. And it would have, I think, created a lot of uncertainty and distress and financial stress among a lot of families in Australia. And the job seeker payment has, I guess, softened the blow to some extent. I mean, it's still a step back for most families, but it really has helped, I think, to make it less serious than it otherwise would have been.
And just thinking about that, Guuyonne, I just wanted to ask a question to Paul in a second about the way this complementary policies, interesting way of thinking about it, the way that they have been delivered. Of course, that it's quite hard to, when you say it would have been a shock for people to go onto what was the previous level of New Start for families and children if they had suddenly been stood down and lost jobs. You mean, I suppose, not just an emotional shock, but actually a financial shock to those households, because that payment is so much lower, both below the poverty line and also so much lower than even the minimum wage at the moment. I want to come back to that issue of the impact on families and households. But just before we do that, thinking about these very quickly put together policies and also legislation. As you know, it's not all just by executive fiat. The Parliament did have to pass very rapidly some large legislative change to make these changes on the tax side and on the spending, the social security side. I wanted to ask Paul, with your long experience inside Treasury, dealing with revenue matters and policy change, and also having done the research you've done on the history of the way that the bureaucracy has, the Treasury has responded over the years in different governments to different economic situations. How hard is it to do this kind of emergency policy? What's it like inside, or what do you think it might be like inside Treasury and the senior elements of the tax office, for example, now as they're trying to deliver that?
Well, thanks, Miranda. It would be all very difficult, of course, and in Treasury, Tax Office, Centrelink, all the agencies that are involved. There's an enormous amount that goes on behind the scenes, before you get a public announcement from the government of a policy. But I guess in terms of that policy making process, there's sort of a fairly standard process. I'm actually write about it in the book, a kind of sausage making sort of policy making process. And probably normally my kind of rough estimate is it takes about 18 months from go to woe to policy issue to be identified, options analysed, costed, advice put to government to go through decision making process, and then through a legislative process in the Parliament. Now, some take a lot longer than that, but it is possible to do it in a very short period of time, and that's obviously what's happened here. We've got very, very large decisions, both health, economic, fiscal decisions being made, and that whole process is crammed into weeks or even days, and that's extremely difficult, extremely stressful, and for all involved. And it's not surprising that some bits come out with a few issues with them. But yeah, no, it would be they'd be under a lot of pressure in there. They would have been to date, and that will be ongoing as we sort of work through, how the whole crisis unfolds and how the government's policy responses play out.
Thanks. So just quickly, your view, Paul, about the policy response so far, those fiscal measures, tax and expenditure measures. Did you have an additional comment about which one of those you saw as delivering the most work, or possibly on their complementarity, as Guuyonne had suggested?
Well, I guess I'd sort of think about the sequencing of events. We tend to say, there's an economic crisis caused by COVID. There's kind of a step in between that. That's partly true, but it's mainly an indirect effect. We've got a health pandemic, and to respond to that, the government has taken some economic measures. So the government has said it was deliberately seeking to put the economy into hibernation. So that was the step the government took. Now, obviously, COVID will have direct impacts on the economy, but the big impact is the policy decision to protect the society from COVID, and therefore to put the economy into hibernation, i.e. that's a soft word for recession. And so we've deliberately sort of put the economy into that state in order to protect against the health consequence. Now, having taken that step, you then have to think, well, what's the government's responsibility? And the very large fiscal responses are the government's response to that. There's three steps there. I guess my own feeling is that I sort of didn't feel that at the start that there was a sort of a good balance of those policy issues. You can really think of health issues, economic issues, fiscal issues, and broader social policy, education issues. And I didn't feel that they were all kind of very well balanced at the start. It was so dominated on the short-term health effects. Now, maybe that's a bit inevitable with the pandemic, But I think now, only a very short period later, the government's kind of really now sort of, it's a bit mixed messages saying, well, we ought to get back to work, but we're all just put into hibernation. So it's a sort of, and I think that tension is playing out in the Federation. I think it's really the state premiers see themselves mainly accountable for the health outcomes, and they were very dominant early. Now the federal government feels more responsible for the economic and fiscal outcomes, and so we're getting it's a bit unbalanced. But if you look at it over 6 months, it's probably balanced. But at any point in time, it's not been all that well balanced.
So one of the issues that will be interesting in this 3 months, I guess we've got perhaps 4 months to our budget date sometime in October, but at the same time as developing the policies for the budget, the Prime Minister said that he would be, that the government would be announcing various things over the course of time before the budget. Perhaps we could take that as some sort of pre-budget consultation, I'm not sure. At the same time, though, the government's going to be making decisions about transitioning out of the existing measures. We have a potential date of June, for example, to reconsider the childcare expenditure. We have a date of September for the end of JobSeeker, and JobKeeper, which is before the budget, of course. Before we get onto this issue of transition, I just wanted to ask Danielle again. So in that rush to get the policy out of the door, as Paul said, the stress of that is really extremely high, and it's a tremendously fast response. A couple of things. One is, what about the overall size going forward? So we've seen estimates of gross debt to GDP of sort of 30% going forward. And also, what about the issues with forecasting those costs? And some people may have noticed the news last week that there was an error in forecasting JobKeeper. Good news, I think, may not cost as much as we thought it would. Grattan pays a lot of attention to estimating of these sorts of things. Do you have comments on either of those things, the size of the debt and also the issue of errors in forecasting?
Sure. So look, on the size of the debt, obviously we'll wait for Josh's update in June, but I think, I've seen plenty of estimates bandied around that suggest, it's pretty conceivable we get to gross debt of 50% of GDP. So a trillion, hit that sort of $1 trillion mark within a few years. That's certainly not, you don't have to make crazy assumptions for us to get there. So we will be coming out of this with substantially more debt than we went in. There's absolutely no question about that. I'm more sanguine than others perhaps about that situation. I think it's absolutely appropriate that the government should be spending big to support the economy right now, and as we might come to in the transition, I think that would include stimulus as well. And I think that level of debt is sustainable. We can worry about that in the medium term, but right now we're in the middle of a pretty sharp economic crisis, and I think the government is responding appropriately. On the 60 billion costing for JobKeeper, that was certainly a nice take out the trash moment on Friday afternoon. It was interesting to me actually just how much they tried to focus on the ATO reporting error and the problem some businesses faced in filling out the form, which meant that the ATO had the wrong steer about how many businesses were enrolled. I think we need to be clear that there was that issue, but there was also the forecast error. When the Treasurer stood up to announce the JobKeeper package, she said it was going to cost 130 billion, that 3.5 million employees would be covered. How did that forecasting error occur? I would like to hear more from the government on this point, because I think it's really important. I think partly it occurred because they expected that the health response would be stronger than what it was, that we would be moving to European or New Zealand style restrictions, which would mean shutting down construction, shutting down manufacturing. You wouldn't have food takeaway, those sort of things, and that clearly would have meant more firms would have taken a big revenue hit and more people on JobKeeper. So part of the fact that we have that missing 3 million on the program is good news. What I'm worried about is, are there a component of those 3 million workers that they thought would be on the program that are not on it? Not because the firms they work for weren't eligible, but because those firms decided it was just too hard to apply, or more likely that they just couldn't handle the cash flow issues in applying. Small businesses had to pay wages 5 weeks in advance before they started receiving those payments. A lot of them simply weren't in a position to do that. They were told to go to their banks, but banks were slow in turning around the finance. So I'm sort of interested in what is the flaws in design of the program that meant some workers missed out versus what's just the good news that we didn't have to shut down as hard as we thought.
Yeah, and I suppose this issue of workers going on and staying connected is important going forward. Guillaume, do you think that as we start to transition out, how should we think about this job keeper and job seeker? You emphasise the complementarity of the policies in the short term, and also the importance of job keeper, that connection of people, workers to their employers. We've started to debate how these things should be phased down, or whether people should be moved on to a larger job keeper, and that has also phased into another set of questions about, in the longer term, should there be changes to the design of these payments in some way for the future? Do you have a view, Guillaume, about that transition, job keeper and job seeker transition?
Yeah, so I sort of understand that this is not going to be there forever. But what I think would be really useful if the government could think about how they could extend it further and more targeted way, perhaps. So I guess when they rolled it out, it needed to be done quickly, because otherwise business would already be closing down before they knew that there was this possibility of subsidies that might mean they could remain afloat. And so I sort of understand the rush that they sort of had at the start of developing these policies. But as things sort of move on, thinking about whether components of the job keeper and job seeker could be kept for particular targeted groups that may suffer the longest from the close down. So we're slowly starting to relax some of the restrictions, but that will impact some industries and occupations more quickly than others. And so I think it would be really good if this good news story of 60 billion that we actually didn't sort of need to spend, if that could be used in some way to sort of lengthen the period where we could target payments, so as many businesses as possible can be saved for people to return to once the restrictions are relaxed. And I think that would be really important.
So that would involve some selection, I suppose, by the government about sectors which are staying shut down. I mean, one can imagine, for example, hospitality. What about the arts and musicians? It would seem many of whom perhaps have not been eligible for JobKeeper because of the specific criteria. That choosing, that selection process probably makes policy design a little more difficult.
Yeah.
Would there be criteria you'd suggest for doing that?
Yeah, so yeah, I think that definitely makes things more complex, and you would want to rush into it. So you want to sort of take a little moment to actually think about what are the key criteria for this. But I think one approach that's also complicated, but would sort of mean that you target the support to the employees that are affected by the close down, would be to not just say to a business, you are eligible if you have lost so much of your normal income, and then apply it to all employees within that firm, but look at the employees in the firm that are actually directly affected, because an organization may have a diverse group of employees, some of whom may be affected and some of whom may be able to continue working on. So if you're thinking of shops, for example, you sort of have often an online sort of part of the business, and then sort of the actual face-to-face shop that has employees in them. Mm-hmm. And so you would imagine that the face-to-face shops may close down because of the restrictions, but the online component will actually continue, and potentially can continue quite strongly. And to sort of try and be more specific about who will sort of be receiving the job keeper payments and who won't, could sort of help reduce the cost and allow us to sort of make it a longer period of time so we can save more businesses and more jobs.
Yeah, no, that's
Miranda,
yeah, go on, Paul, please.
Can I just say one thing on that? Not so much on the specific policy, but just going back to that, the policy making process. I would imagine that this first round of policies was done very centrally. My guess is that it would have been very Treasury, PM&C, ministers' offices, and you wouldn't have had a lot of involvement of the, the line agencies, the ones with a better, understanding and who can design things in a more precise way. Now there's a bit more time. You'd hope that there's a sort of more considered policy process going on with those line agencies that do understand these policies in a lot more detail, and I think could put a lot more nuance. You could get a much better design. These initial ones are very blunt, and it was just, you had to be done quickly, get money out the door. But, I'd hope that there's a good process going on now.
Can I also add a bit of macroeconomic support for what Guuyonne was saying there? I think there's a real risk at the end of September, essentially, is we're just turning off all of these supports at the same time. So it's going to be, 70 billion of government money being pumped into the economy in the September quarter. That's all gone by the end of October. So, the hit to business incomes, the hit to household incomes, the hit to overall economic activity by pulling out 15% of GDP effectively overnight is really big. So I think the transition point is important for keeping some of those businesses that will still be struggling alive, and it's also important for the broader macro picture as well.
So it's been, we don't quite know quite yet, of course, what the government wants to do with transition. Though we have heard some signals about transitioning JobKeeper a little bit. There's actually been a question that's sort of relevant, possibly I could put it to you, Danielle, about this question of what if people, they see that this is going to stop, they're worried about the future, they start saving instead of spending whatever payment they're receiving in order to kind of protect themselves for the future. Is that a risk in terms of targeting the further stimulus or transition, do you think?
I think that is a risk. So obviously we are in a period of very significant both consumer and business uncertainty, and I think the uncertainty around this transition of the emergency support measures feeds into that. So absolutely, we should be worried about consumers closing their wallets. On top of that risk, we have the point that we know a lot of households and businesses have deferred loan repayments during this period. A lot of them have also deferred rent, particularly businesses under the mandatory rental code. Again, all of those supports are coming off in September. So you're going to have a lot of debt overhang as well. And so all the, the missed interest payments have been capitalised into those loans. So we'll have businesses, consumers on the other side with more debt than they went in with, extra rent to pay, uncertainty about the government support measures. I actually see that as the real danger zone for the economy. So we've kind of just got through one danger zone, and I think that September-October period, I'm really worried about it, and I think getting policy settings right in advance is going to be so important.
So what that raises, I think, is this issue of the balance of public and private risk. One of the fascinating things for me about our policy response, our fiscal response to COVID-19, we've seen it across the world, but this striking Australian response has been how much it has shared the risk through the public sector. One particularly interesting aspect of that I wanted to touch on before talking about longer term possible directions is the childcare response. So people will, I'm sure, be aware, and those who are listening who have children who might be using childcare centres will be aware that childcare centres, and many of them were eligible for JobKeeper, and the JobKeeper package was working for them, but it was not enough to manage the very, very substantial drop in income that centres had, and there was therefore a sort of a substantial direct subsidy paid by the federal government to ensure essentially that childcare would be delivered for free, or rather no net cost to households. There's just been a parental survey actually that shows that households really benefited substantially from that because they had significant drops in income. There was a suggestion that that might be undone as soon as June because of that one-off payment. I wanted to go to Guuyonne and then perhaps the others if you've got a comment about that childcare policy. Do you see that as actually having played a role in the now, and what might be the transitional approach to that childcare issue?
Yeah, I think that was really important actually to introduce, because I think one of the risks was that the people who still had a job and some of the people who were essential workers wouldn't have had the childcare centres to look after their children if not sufficient parents would continue to use the childcare centres. And there was some risk early on after the close down that would happen. And so I think the childcare subsidy really helped to turn that around, to ensure that people who needed childcare to be able to continue their work, to continue working. And I think that was really important in a time where so many people lost a job or had reduced hours, to at least ensure that everyone who still had a job to go to, that they could actually continue doing that. I mean, as to what would need to happen in the transition, that's really difficult. So I think it depends on how quickly people can get back to their original incomes. So one thing we know from research that we've done in the past is that it's the people on sort of the lower incomes that may struggle to actually pay for childcare, and especially for secondary earners, if the earnings they can get are not sufficiently high to warrant sort of the cost of working in terms of how much childcare costs, then that could sort of slow down, I guess, the return of people to work. And given that a lot of women have been hit by the crisis perhaps more severely than men this time around, I think we would want to try and have policies in place that help them get back to the labour force. And I guess childcare costs may be an important component in that.
So I guess the sector itself employs many women, but also then can deliver that ongoing support. I might come back to that question also and ask our others, but I wanted to move on more generally and come back to that childcare policy question. We've been thinking about what's the immediate cost and what was actually done in terms of that policy and law design, and then how do we think about transition and how complicated things become. What about the longer term? I mean, the Prime Minister did raise the possibility of economic and tax reform, talked about federalism reform. He seems perhaps to have an appetite for this. Is a crisis, you know, some interesting questions. Is a crisis a good time to do reform? What is the capacity for this? Paul, I might start with you there.
Okay, yeah, well, certainly that saying, never waste a good crisis. But that means different things to different people. One thing I'd say, just while we're talking, just watching the little news feed, the PM's confirmed the government will dump its so-called union-busting bill, and the IR minister will lead a new version of the Accord, apparently. So kind of signalling sort of an industrial relations, but you know, it fits in with the skills agenda. I guess, I mean, I'll talk about, I guess, the thing that I, know most about, which is tax policy. And I'm actually working at the moment on a project on a history of tax reform exercises in Australia and, how to go about tax reform, what works, what doesn't. And I guess there's sort of different approaches. So I'd kind of think of it a little bit in the kind of a short term, things you could kind of announce, fairly quickly, and longer term things you'd need a review to sort of to take you into. Now, they've moved to the Treasurer, mooted it at in his economic statement in 12th of May, and the Prime Minister as well, sort of a microeconomic reform agenda, one part of which is tax. So on the sort of tax front, I mean, there are kind of fairly obvious reforms that have been well discussed and wouldn't need another review, as there are political issues, of course, and judgments to be made. But there's probably one set on the state front and one set on the Commonwealth front. On the state front, and probably the most obvious reform of all in the tax system is the switch from stamp duties on to a sort of a wealth tax or land tax. So stamp duties on property conveyances to a land tax, which a number of the states are sort of approaching in part, but it's a very difficult and long, it needs to be a long transition. But it's a well, it's well worn, well discussed, well accepted. Politics are tricky, but on the Commonwealth front, it's a bit less obvious. And ask different people, I'll have a different answer.
Yep.
I guess I feel the most obvious spaces when we think about the longer term productivity, think about an economic efficiency argument. Then I think taxation of capital is the most obvious area, and the kind of headline issue there is the company tax rate, and now company tax rate it's really most relevant to foreign investors, because domestic investors, we've got the imputation system, but our company tax rate now is very much at the high end of the international economy, and so some package with a reduction in the company tax rate, but you always need to think of tax reform in a revenue neutral framework. So where would you sort of balance it? And there are other ways in areas of taxing capital or returns from investment. So things around rents, various rents in the resources sector, in the banks, specific taxes like how do we tax the big digital companies. So some package there that was sort of a lowering of the rate, but some broadening of the base.
So this is an idea, sorry to stop you there, Paul, an idea of, you said revenue neutral, and that is the kind of very common dynamic for tax reform, of course, but in this, it's hard to know. I mean, should we be raising taxes or lowering taxes in this current situation? Danielle, have you got a comment on that?
Can I just say one thing on that before just to go to Danielle? Yeah, sorry. I'd separate the two. Because if you mix the two, what people do is they say, I can improve economic growth by lowering this tax. Like they just discovered that tax, it impacts the economy.
Yes.
So you get all mixed up. And so in reform, you're better to think revenue neutral. It doesn't mean you're saying you should not change the tax burden, but just think of the two separately. Sorry, that was...
Okay, that's an interesting way of thinking about how one might put together a package, which we really haven't done for a couple of decades effectively in Australian tax policy. Danielle, have you got a view about raising taxes, lowering taxes in the current time?
Look, so if you're talking the current, I did like Paul's distinction between the short and the long term, because I think there are two very different dynamics going on there. So in the short term, we should absolutely not be raising taxes. We have a very weak economy. We should be thinking about the ways in which government can stimulate. I wouldn't probably put tax cuts high on that agenda. I think it's going to be largely about propping up aggregate demand. So the sort of stimulus I'd be looking for is more around supporting construction through short-term projects, supporting government consumptions in area of social need, perhaps some payments to households. But in the longer term, it's interesting. So as I said before, we will be coming out of this with substantially more debt than we go in with. The government's talked a lot about growing our way out of debt. And of course, if you have very high nominal growth rates, debt does come down as a share of the economy over time. A lot of people point to the kind of post-World War II experience where we ended up with more than 120% of GDP in debt, and then we had 10% nominal growth. But I don't think anyone's thinking that Australia's growth rate is going to look like that anytime soon.
Yeah, I mean, pre this pandemic, as the Prime Minister keeps telling us, we had decades of economic growth, but the growth rates in recent years have not been that high, and the idea that they would be particularly high now is hard to believe. So could tax reform really stimulate investment?
Well, I mean, I think you look at all the Treasury models of what tax reform does, and it can deliver a boost to GDP. That is clear. But when you actually look at the modelling around the company tax cut or the modelling around upping the GST, then they're often not big numbers. So you're talking a fraction of 1% increase in a given year. So look, should we do them? Yes, where they make sense, we should absolutely go and pursue them. But is it going to be game changing in terms of, you know, having really strong growth and not having to worry about debt. I'm not convinced of that at all.
Which does seem to suggest that we might need some more tax from future generations if we're concerned about.
I think it will be a combination of growth and budget consolidation, honestly. So yes, I think when I say budget consolidation, that either means higher taxes or lower spending. Unfortunately, that's the way that equation works.
Guuyonne, do you think, I'm also looking at a couple of questions coming through that are sort of related to these topics. Guuyonne, do you think it matters who's paying taxes? Some of the work that you've done that I'm also aware of is about those, for example, high effective tax rates on second earners. So if we're talking about individual taxes, a question that's come through is about whether increasing the GST is a good idea. I don't know whether you've got a comment on either of those things as potential areas of tax reform for the government going forward.
Yeah. So yeah, I think GST is sort of something where the impact on productivity may be less than if you were to tax businesses more directly or tax people on lower levels of income.
So meaning the negative impact. So potentially it's a more efficient tax. Is that what you're?
Yeah, less distorting in terms of affecting how people would behave. So I'm not a business tax expert, so I've looked at income tax policy. And when I look at income tax policy, what we find is that people who are at the low end of income are more responsive than at the high end. So I'm personally less concerned about increasing taxes at the higher end of the income range. I don't think people would react to that very strongly or work any less because of it. But when we look at the other end, when the tax at the low end of income is really high, it may provide disincentives for people to enter the labour market. And this may be particularly the case for secondary earners, where you have to sort of balance the amount of extra income that you get versus the additional costs that you incur through needing, for example, childcare or transport, and sort of the additional withdrawal from, for example, family policies, because tax interacts very strongly with all these other policies that are around as well. So for a lot of families, it's the interaction between the tax and family payments or income support payments as well. And that's really important to try and keep that as low as possible at the end of the income range when people are entering the labour market. Because
so Karen, one thing that's been interesting, you talked about complementary policies in COVID-19, and one of the interesting things that has happened in the job seeker design, the social security design, has been changing the taper rates, removing some of the income tests, removing the conditionality, the very tight work conditions we put on people receiving that payment. And the childcare issue, we've essentially made it more universal through this kind of big intervention in the child. Both of those seem that will cost more, might mean more taxes in order to fund those broader payments. Does this suggest that in the longer term we should be moving more towards those less targeted and more universal payments in either the childcare sector or in social security job seeker?
I think it's a matter of choice. So I think if you want to do tax reform, you have to work out what the priorities are. Yeah. So if you look at, for example, Northern European countries, they've chosen for high tax and for high expenditure. So they do have childcare subsidies that are way higher than here. We provide very generous income support, but that comes at the price of a higher tax rate for people who earn income. And so I think in Australia, there's sort of been a philosophy more around targeting very strongly. And so that means taxes are much lower, but you have these income ranges where people are losing a lot of income as they sort of start earning extra, they pay more tax and they receive less family support and childcare subsidy and other types of payments. And so it's balancing those two, but it depends on the priorities you have, I guess, as a society.
But I suppose if so the question might be productivity coming out of COVID-19. The question might be, how do we use that? Danielle, I know that Grattan Institute, I think, has in the past criticised the previously legislated stage 3 personal income tax cuts, which are at the upper end. Would that still be your view? That would involve legislating to actually wind back a previous reform proposal that was legislated.
Well, one of our major criticisms of those tax cuts was just how crazy it was to lock in such big tax cuts in advance when you didn't know what might happen in the economy.
I think just crisis seems to have demonstrated that issue of
indeed.
You don't know what's coming.
Slightly vindicated in their stance. What we said is, you know, if they make sense at the time, do them. I mean, what was interesting to me in that whole, you know, there was this 3-stage, 300 billion over a decade tax cut package announced, you know, 7 years in advance of stage 3. The government kind of put that front and centre pre-election as, you know, this is big tax reform. It didn't really look like tax reform to me. So yes, they took out a tax bracket, but was that going to fundamentally change behaviour? It was a flattening of the tax scales. Largely, it was just giving back bracket creep that was expected to occur over that period with a bit of a tax cut at the high end. Everyone else's average tax rate was going to creep up a little bit still. To me, that doesn't look like tax reform. What I would suggest is not that we would totally cancel those tax cuts. I think we do need to watch the income tax burden, and bracket creep does mean it creeps up over time. But actually, let's look at a package. You know, Paul talked about doing it on the capital side. Let's do it on the income tax side as well. How do we offer tax cuts that create good incentives to work, while at the same time perhaps rolling back some of the tax concessions that eat away at that base? So I'm talking about things like superannuation tax concessions. I'm talking about negative gearing, capital gains tax, workplace deductions. Let's have a look at all of those elements of tax and perhaps craft a package that allows us to deliver tax cuts while broadening the base as well.
Paul, do you have a comment about making tax policy 7 years ahead of time, given the crisis? But also, I might then come to each of you before we close and ask you, I guess, is there one thing that you can see that we're living differently now that you might see a different fiscal policy response to, whether it's on the taxing side or the spending side? Paul, what about this tax reform process, long or short term? How should the government proceed at this point?
I think with tax reform, the word reform's used. I mean, reform's more typically about the base than the rate. You know, the standard kind of thing is just trying to think about, get your tax base right. That's the main thing that's, you know, that's relevant to sort of the economic efficiency of your tax system. And then you can increase the rate up or down depending on how much revenue you feel you need, without, you know, if you've got the base right, without big distorting effects from on the rate. Locking in tax cuts that far ahead look particularly unwise, and everyone was saying that at the time, but it was, you know, it's a political thing. Now, in a sense, all the tax cuts were made, they're fundamentally just giving back bracket creep. Now, there was a bit of redistribution along the way, but if you look at over the certainly over 10 years, it was just return, you know, so do you return bracket creep each year, like Peter Costello announced a tax cut every year, or do you announce it 7 years? If, you know, the overall burden of the personal income tax wasn't, you know, the mix wasn't changing significantly. So, yeah, I mean, my comment on that. I just make one comment about, Guuyonne was talking about the, you know, there's some trade-off between the progressivity of our tax transfer system and some sort of economic effects. I think that's right. But I don't know, you know, I think in a sense, if you have a progressive tax system, personal tax system, you have a means-tested transfer system, then those disincentive effects, those EMTRs are there. There's just no way around it. They are there. You can fine-tune things to try and ameliorate it, but that's the deal. So you either accept the progressive system and live with those effects, or you say, no, we don't accept the progressive system. My feeling is that the progressive system matters more. It matters, certainly to Australians, to most people, and we have to live with some of those other things. Of course, we try to design policies to reduce them, but we can't think we can have a progressive system but somehow make these EMTR problems go away.
So it's one of those issues about complex interactions, of course, as well of policy. Yep. So a final comment from you, Paul, about here we are post-COVID-19. where we've gone in the conversation, it's like, are we just back in our tax and transfer policy debates, you know, the way we were pre-crisis, or is something really different? What's the one thing that you might say we really, is there anything we have to think about differently now? I'll come back to Paul and then I'll come to Danielle and Guuyonne to finish up.
I guess I probably don't think it's different. You know, that, you know, never waste a good crisis. So there may be opportunities to do some reforms that, you know, would be difficult otherwise. But I don't think the game changes in terms of economic reform. That there's always a need to for microeconomic reforms that will improve the productive potential of the economy. We've got to manage the health issues. Obviously, we've got to manage the macroeconomic issues, the budget issues. But the micro reform things, the things that will enhance the productivity, don't change. But where there may be an opportunity to advance some of those that we in tax, in IR, where we haven't had before. So we should take that opportunity.
Take that opportunity. Danielle, is there anything that you think is really different now we need to think about in terms of fiscal reform?
Look, I agree with what Paul just said. I would say, you know, to me, it would be really hard to see them take the rate of social support back to the New Start level. I don't think it can stay at the job seeker level, but I think in a world where we know we're going to have a lot of unemployment, pushing people back onto that rate, which sat below the poverty line, it's pretty hard to imagine the government can go there. I hope they don't go there. I think there's a real chance here to bring that payment up to a level that people can actually survive on, to, you know, help them in their job search, and, you know, perhaps address some of those strange incentives around taking part-time work that exist. Agree with Paul, we're never going to get rid of EMTR issues, but there are some ones to do with New Start which are particular disincentives for people to getting back into the workforce through part-time work. Let's fix this up now.
So perhaps it really is an opportunity in social security. And Guuyonne, I'm going to give you the last word before we finish. Is there anything in particular you can see post-COVID-19?
So I full-heartedly agree with Danielle on the income support. So I guess it's not really sort of different pre and post-COVID, but I think the COVID crisis has shown how incredibly difficult it is to survive on that rate. And I think the government has acknowledged it by creating the job seeker allowance for people to depend on while this crisis is ongoing. So to return it back, I think would be really very difficult on all the people that are currently unemployed and would then have to depend on this really, really low income support payment, which is below the poverty level. And yeah, I think that to me is...
So perhaps that's almost the most important thing. So that together with potential large debt is perhaps going to be driving tax reform. That is what's going to drive tax reform. We didn't get to the final question of someone on the panel who, would we ever see an increase in the GST? We haven't answered that, but perhaps if these other policies go ahead, we're driven inevitably towards some sort of broader-based tax reform. So look, we've come to the end of our time. Thanks very much, those of you who participated and joined with us. Thanks again very much to my panel, Paul Tilley, Danielle Wood, Guuyonne Kalb. Really great to have you join me in this MLS webinar series. Thank you.
Thanks, Miranda.